Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. If you're new to the page, go ahead and hit the like, subscribe, and a notification bell. Anything I say is not a suggestion for you to buy, hold, or sell a stock, but we're going to discuss some things right now. Let's talk. Listen, a lot of you guys are still trying to find the hot stock. A lot of you guys have gotten into investing in the last 2 years. I will tell you that when I was younger, I jumped into the shallow end of the pool and was trying to swim into the 12 feet and I almost drowned. They had to jump in and get me. And what my dad said to me is, you can't do what the big boys do because they studied how to swim. Your fool butt, not even knowing how to swim, just jumped in the water and almost drowned in the deep end. I'm going to be blunt with some of you guys. In a bear market, which we are in a correction, we are literally correcting. I'm going to say this yet again because I don't want you to lose money. Now is not the time to try and get rich overnight. It is the absolute worst time. Every time you see a stock that's overhyped right now during this period, this is not 2020 or 2021. The fall of 2021, you could pick a stock. I don't care what day it is. You could have bought it and in 30 days you can make money. Not now. As a matter of fact, it's more likely that you're going to lose money by buying stock right now. I don't care if it's the hot stock of the day. I don't care if it's the hot, go here, check this one out. So let's look at something that's going on right now. Everybody was, in the SoFi. Look at what SoFi did in the last day, right? That's one day, right? Boom. Look, good news is coming. They're going to be, they're going to get approval to be a national bank. Yay. Okay. And then, this is what happens in bear markets. BBIG, hype. Okay, that's cool. Like, boom, BBIG, yeah, we're making money. We killing. Oh, what's happening? And so what I want to tell you guys is this. A bear market keeps finding new floors, and then somebody hype a stock up or whatever, and a lot of these stock are oversold, and you buy in, and then dead cat bounce, then it goes even lower. Then it gets a bounce, then it goes even lower. Then it gets a bounce, then it goes even lower. And it goes on for months. 3 to 14 months on average. We are entering into a bearish market. Okay, I'm saying ish because anything could happen. So what I'm telling you guys is, if you get into these plays, you need to get out as soon as possible. Okay, you can't do a fool move like I did and jump in. If I was smarter, I would have jumped in to the 12 foot and swam towards the shallow, which means that you need to be thinking long term right now. So that's why I use that analogy. I had this thing backwards, okay? And so, like my dad said, you almost drowned your food self. He was right, because I just looked, because the big boys was doing it, I just jumped in it. I'm telling you, you need to learn your craft. Do not follow these guys that know what they're doing. Can you make money? Yes. I'll tell you, I bought a few shares of SoFi and sold it. But I could trade pre and post market. That's why I use the Webull app. So I read a little bit. I didn't buy a lot. But I'm not going to get out on here and go SoFi's a buy right now, because most of you would buy into it and lose money. So I'm not going to talk about it. Okay. And so the only thing that I did buy is a call option on Disney, right? Because here, I did a call option on Disney, and I did the June option on Disney, and I went to tip ranks and I saw what the average price is, what they're saying in the next 12 months. When does Disney usually, pops in the summer months, right? So the average price is 196. So this is the way you need to be looking at it, right? Right now, Disney is beat down. Market is correcting, and we're going into a bear market, could have a crash, and so it's beat down now. So that's why I did it, and I got it at 405 now. All right, I just put another one in, 408. I'm sorry, 408 on the option. Now, I'm not the options guy. I will tell you, I checked with my options guy. I'm not the options guy. I will tell you, don't ask me questions about options. I am not the options guy. I know my limitations, okay? But every option play that I've made so far, I've made money because I only go on extreme cases like this where the upside far outweighs the downside. So check with someone that does options all of the time, all right? But I'm telling you guys, do not dive into the shallow and give up. You are all out of breath and you're in the deep end. You're going to drown, right? This is what we need to talk about, okay? But having said all of that, I'm going to continue to tell you. Yesterday I wasn't here. I was getting a root canal, found out I had an infection and a cracked teeth. Thank you for the family that said, hey, check. Somebody said, check, you might have a cracked tooth. It exactly was that, cracked tooth, and I needed a root canal. So I'm just glad. I never been so glad. I literally went to sleep during the root canal. That's how much less pain the root canal was. But what I want to tell you guys is now's the time. It's simple. DCA, dollar cost average. And if you don't know what that means, please just go and put in the search bar what dollar cost average is. Google it, YouTube it. It's really a simple principle, because it assures the best outcome when you don't know where from day to day where this market is. And I just think, and during a bear markets, what I've learned is Fridays are usually bloodbaths because people don't want to hold money over the weekend. So I don't know, this Friday, it could be a recovery, but I'm not going all in on one stock at this time, because just when you think, oh, it's oversold. No, when interest rates go up, you have to reevaluate every stock that you own. So the evaluation that tells you that charge point is a buy at $17 because of higher interest rates, now it's a buy at $12. So you got to lower the floor on what you're looking for. And if you're not that skilled to understand that, hold your money and split it up. And when I mean split it up, usually I tell you split it up into 3 and 4 parts. No, this time split it up into 3 and 4 months. Just that simple. And just dollar cost average all the way through. Okay. Then I'm going to leave you guys with this. I think that if you really want to start dollar cost averaging heavy, I would wait until the first interest rate hike actually hit. That's what I'm waiting on. So I am dollar cost averaging into stuff like Bitcoin. Okay, I have a full Bitcoin, so I'm gonna start dollar cost averaging into a second Bitcoin. For those of you that got 10 Bitcoin, man, when I grow up, I want to be like you. But this is what I'm doing. But after the first rate increase, or the first rate, which will probably be 0.25%, then I may just go ahead and put a full buy the rest of the full Bitcoin. And if it's a little higher, so what? I'm limiting my risk. I can tell you everything I'm telling you about the stock market applies to crypto. All right, fam, we needed to have this conversation. So if you're going after chasing these plays, and I'm not going to talk about any other YouTubers, but it's okay for them to talk about these because there's money plays to happen. But you got to know your exit point. That's why I'm not going to talk about it, because I know a lot of you guys are new and I don't want anybody to lose unnecessary money. But one thing I can freely talk about every day, and that's dollar cost averaging in through this bear market. And when the markets show a sign of a turnaround, then we can start going back in heavy. All right, good people. Even banks have taken a spanking. Morgan Stanley took all of the banks are saying that they're paying more in wages. All right. So if you want to know one of the lowest paid jobs, that's bank tellers. Right. And so now they have to pay extra money to keep their employees, which a lot of them are leaving because these headhunters are going, hey, let's go grab these guys because they're getting paid peanuts. All right. And so that's what's happening to all of these banks. So in the earnings reports on these banks, they are losing. OK, but what is most likely to happen when the interest rates actually hit? Banks will start to make money. Right. So we have to know when to move, know when to hold them, fold them, walk away, run. All right, good people. I hope this helped somebody. Make sure if you want to do some of these swing trades, download my link for Webull. Deposit $1, you're going to get up to $3,300 in free stock. But I use it for my swing trades. I don't use it for my dollar cost average. I use Fidelity for that. But if you, like SoFi, you could have bought it and have been out of it already, took your money and run. But I would suggest if you're new and you don't know how to profit take, or you are simply getting stock to hold long term, I'm going to look you in the eye and tell you, you haven't seen the floor. You haven't seen the floor in SoFi. You haven't seen the floor in ChargePoint. You haven't seen the floor in most of these stocks. Yeah, and ChargePoint is at a buy range right now. I must admit, it's looking very tempting at 14.30 or whatever. But realistically, I think it's going to get down to $12 when it's all over. 11 when it's all over. Okay? Unless the Fed come out and says something different. I love each and every one of you guys. And I just want to get real information out as much as possible. For those of you that haven't seen it, make sure you check out this video that I had a fill in for me yesterday. One of the greatest investors, if not the greatest investor in the history of the stock market, Warren Buffett. Make sure you listen to everything he has to say. Live, love, laugh, and learn.